Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, well, first thing, I forgot to turn on the lights. There we go. How are you doing this fine Wednesday morning? Some big headlines overnight with, well, I don't know. It's one of those things where, again, it's like a central banker says something and like the market is probably like way overreacting. But like this has to do with the Japanese yen. And yeah, so let's go to the charts first. So basically, well, and also I think we got to start with the Japanese yen. Where is it? 6J. Ooh, yeah, okay. Well, so I think Zero Hedge and others may be overstating the significance of it. But let's see. So basically, the Japanese central banker said, well, they're not going to raise interest rates while asset prices are plunging. And the market is reading this as a huge capitulation. And you can see the huge down bar in the Japanese yen. But it's not that bad. It's not that bad, is it? Let's come back over here to the treasuries. And the treasuries are kind of only mildly reacting to it. I thought yesterday was concerned about the auction and all of that. But you can see here that, like, I mean, we were down, but like it didn't do anything particularly interesting around the auction. And the demand, the actual like net demand for the auction was actually really good. So I don't think that validates the theory that the unwind of the yen carry trade causes less demand for treasuries at auction. But we have a 10-year auction today, so we'll see what goes on. We should expect to see a lot of big icebergs and so forth over here in the treasuries, but a little bit lower here overnight. S&P 500 kind of just sideways, but you know, this comment from Japan does appear to be boosting them a little bit. Oil jumping up there. They're looking pretty good. I did see some comments about like end demand and so forth. Gold and silver. Yeah, I mean, that's a little bit better, but they still really took it on the nose. Especially like silver is just like really lagging compared to gold for some reason. Copper, not so good. And what about Bitcoin? Well, Bitcoin is still reeling from that big downside, but they're trying to recover it. Yeah, that looks you know, they can deal with that. It's not the end of the world over there. Good morning, Octavius, Uzi, A. Paul, Eric. So, just to double check here, a couple of things, make sure that I've got everything down, what we got to be looking at here. IV PMI today. Okay, well, that one is not like a huge one, but it's for Canadian news. It's relatively major. It's one we can look at. I'll put it on the list here. Okay, so here, today is Wednesday. Flows, JPY, central bank comments, and then we have a 10-year auction, and IV PMI, liquidity much improved. So I think well, this gets really interesting actually, because I kind of feel like, well, on one hand we should see risk premium come out, right? But then on the other hand, I'm kind of like, well, this kind of bodes well for rates. Doesn't this kind of make things easier? But the problem is, if I'm taking it from that approach, I'm kind of discussing more of like what is an acceptable interest rate, and I'm not quite sure where that is, or like where we are relative to how much the Federal Reserve is going to cut and whatnot. But should this lead to more buying or selling on the day? And that should cause, well, right? You get what I'm saying? Like, well, isn't that a sell? So if they're selling the JPY, we should sell the treasuries too, right? So this one gets a little bit weird, because I kind of want to buy the treasuries, but I think that we should be selling it here, or rather, I think that the flow should be negative. But then we think that piece of news should cause heavy flows in the treasuries. It didn't cause heavy flows, so let's kind of monitor it and see if we start to see a trend in one direction. I'm kind of wondering if they will just kind of split the difference on that, and that the action will be more about the treasury auction today. Could be. And so I'm going to be keeping an eye out for any kind of like a rate lock trade. Usually on a 10-year auction day, you're going to see a massive iceberg somewhere. And it can be really hard to catch strong trends on those days. See, if I say the central bank comments is a sell, because the Japanese yen is going to go down and risk premium is going to come out of the market, even though it also kind of means a more dovish monetary policy. Okay. And then 10-year auction is probably a positive flow, right? Then that actually means that we don't have a super clear imbalance per se yet. Unless this is actually a buy, and then it's buy the treasuries. So I am maybe slightly more interested in the long side. Who is it speaking right now? I'm hearing some comments on my news squawk. Somebody's saying, oh, it's no big deal. It could be true. You know, like the big thing from yesterday is like, we're all waiting for another shoe to drop and all of that sort of a thing. But like, not a whole lot happened. It kind of felt like, oh, all these guys got stopped out of a trade, and then that was it. And then we're just kind of sitting here waiting for the next bad thing to happen. That's like a sell the volatility sort of an event, for sure. For sure. Of course, I think we still need to be concerned about potential escalation in the Middle East. That is one thing that's kind of still ahead of us. But I don't know, like last time that happened, you know, they shot a couple of missiles at each other and everything, and then it was fine. So I'm not so convinced that this latest issue, like especially since because last time that this happened, right, Iran like retaliated, and Israel basically showed that, like, you know what, like, we can do whatever we want because we have the technology. So like, I really don't think that Iran is going to do something so drastic that it spirals out into all-out war on that side. I suppose another trade that we could be looking at is trade relating to the presidential election, because people are seeming to be influenced by this Democrat honeymoon period that we're seeing, and so I think it may be bleeding out into some trades. Wouldn't necessarily be the best flow for markets. I tell you what, the whole thing, like yesterday, seeing the internet go gaga over this Waltz guy that they chose as the vice president is just really they're astroturfing so hard. All of this, then nobody ever heard of him before. All of a sudden, he's the greatest guy in the world. Okay, Reddit, chill out. ECB's Ren, that was who was speaking. Well, so far, that trend is looking pretty good up to 05. There was there's 3,000 contracts at 04.5, and now they've already traded 3,000 contracts at 05. That's pretty good. Yeah, a rock could be Harris's vice president pick, and it would essentially be the second coming to the media. One of the things that I think is kind of funny about it is that when I go and I look at the right-wing forums and what the right-wing people are kind of talking about, they're still focused on Josh Shapiro and whether she should have picked Josh Shapiro or not. And they haven't really gotten too much into, okay, what about this, the actual pick? What do we know about him? What does this kind of say? How could this potentially change the race, right? I guess it's because the right, one of the things that very much occupies the mind on the right is that the anti-Israel sentiment among the left. And Josh Shapiro is kind of a really weird situation when it comes to that anti-Israel sentiment on the left, because he is Israeli, I guess. He like served in the Israeli army. So the hardcore anti-Israel, pro-Hamas side of the Democrat Party really doesn't like Josh Shapiro because of that. But then Josh Shapiro is extremely anti-Benjamin Netanyahu. So the pro-Israeli side doesn't like him because of that. Do you think that Trump has a weakened campaign presence? Well, here's the thing. He's out there every day. He's having a rally literally every day. I'm kind of starting to wonder. So this goes back to this. Okay, what is your overarching strategy for the election, and what's going on here, and which kind of narratives do you want to approach, and so on and so forth. And when you look at Kamala Harris is an extremely weak candidate. She's probably the weakest candidate that the Democrat Party has ever had, maybe more so than Walter Mondale. And it's really okay, the Republicans, they went right took a hard right turn with Donald Trump, okay? And then the left, went and turned and just completely drove it off the cliff. Because there's absolutely no way in a million years that Kamala Harris would win a Democrat primary. She ran as, I am the most far left one on this of the field, right? She was like, Bernie Sanders is too right wing for me. That was the way that she ran, right? So that's not going to play in, especially in a place where, you have these states, Pennsylvania, Michigan, etc., that are fairly middle of the road right now. That shouldn't work very well, right? But I think that a lot of people are kind of working off of this assumption that this is more a turnout election, that convincing the people in the middle of the road doesn't really matter, and that it's more like, how can you get more of your people to show up on election day the Democrats are super excited because they're far, it would be like if you nominated Majorine Taylor Greene as president or something like that, right? It's just like the furthest, most ideologically entrenched person, right? So, of course, the people on Reddit, they're going to love that and everything. Will it actually result in the turnout, though? Well, it's hard to say. Trump has one event on his webpage and it's on the 9th. Yeah, but they had a campaign event yesterday. Right? Harris had her first campaign event with the vice president, and Donald Trump had a campaign event with his vice president, and his vice president trashed the pick. Went into all the reasons why the pick was bad and all of that sort of stuff. It's like, he's on the ground because, one of the things was that having rallies significantly increases the turnout in that where you have the rally. Okay, it's a big deal, especially when it's closer to the election. Do they really have to be campaigning super hard right now? I don't know what he's doing. What is he doing today? I don't know. Who knows? You don't, a lot of these things, you don't find out where they're going and what they're doing until it happens. It's kind of, we're in a spot. You gotta understand. We're in a spot where we don't really get very good insight into what is going on. You get, because you should expect to see Harris get a bump in the polls. You should expect to see a bump in the polls. And quite frankly, I'm starting to come back into this, I think that there are systemic issues in the polls. So I'm not sure that you can really trust them to accurately reflect what the election is going to be. At least not until we get really close to the election. Because one of the things that really, really kind of controls or balances the polls out is are they actually a likely voter? Are they really motivated enough to go out and vote on the day, or have they already voted? And those are things that you don't really get to see until late October, right? So, even the polls, you can't really trust. You're going to see all of the astroturfing online. All of the conversation online is going to be about Kamala Harris. So you kind of have to just, sit and weather out the storm and then see where the pieces lie after Labor Day, right? So you kind of have to just, ignore it. At least ignore it in terms of your analysis, who's gonna win, right? I'm bargaining on them cutting rates and starting easing, kicking the can down the. Well, why is that kicking the can down the road, Eric? I'm not quite sure I understand where you're going with that. I mean, they are going to cut rates. Chances that let's go and look at that. I bet you that the chances they cut rates in the September meeting are probably 95%. Probably 90%. I don't know. Back to the vice president pick. This election is becoming very odd and unique because normally what you do is okay, you're George Bush. George Bush was the moderate. You understand? He was compassionate conservatism and kind of more moderate Republican and all of that sort of a thing. So what do? You pick the far right VP to shore up your base, hence Dick Cheney, right? On the other side around, when you're the far right guy, like Donald Trump, you go and you pick a somewhat more moderate and more acceptable to the general public guy, and so you got Mike Pence, right? you don't usually, you're the far right guy, and then you pick like the furthest like you guy there is, which is what you've got with Vance or with Kamala Harris. I tell you what, man. I saw this one post on Reddit. I don't think that this guy had any clue what he was talking about, but I just saw this one comment on Reddit, and they were like, well, they picked somebody that was more further right than Bernie, but further left than Bernie, but I think he's not far left enough. Dude, this is a guy that's outright promoting socialism and saying socialism is great. Oh, socialism is actually just being a good neighbor, is what he said, right? Like how he's as far left as she is. I've never seen an election like that. So they are all in on base turnout. They are all in on turning out their base. And I really don't think it's going to work. But I'm not getting very good indications that it's not going to work right now. And I don't think that any of the data that I'm actually getting is any good anyways. So I guess we just kind of have to sit and see what happens. Anyways, rates. Tools. FedWatch. Next FOMC meeting and blah, 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 blah. Okay, September. So the current target rate is 5.25 to 5.50. And they are saying basically a 100% chance of a cut. And the market is pricing right now a 34% chance that they do a 25 basis point cut and a 65% chance that they do a 2 basis point cut. Or sorry, a 50 basis point cut. That's so there you go. Okay. So does that help your crypto? Kind of. But it might not be the most important factor. So in crypto, having more easier rates means more money out there, which means more money that people have available to be able to buy cryptocurrencies. Ergo, cryptocurrencies go up. So easy central bank policy tends to result in buying for Bitcoin. But there's some people out there that have been selling, like that week last week. I forget who it was. There's some big fund or something that was selling. You've got the Mt. Gox thing is still kind of going on. And if you're cutting interest rates, there's some concerns about the economy. So like if they are normalizing interest rates, but then everything is okay, and we just kind of like level out next year, then that probably is a pretty good situation for Bitcoin, at least in the long run. But if this is like things are actually really, really bad and we're going to have to cut interest rates because we're about to fall into a recession and it's already too late and we have the recession, that's bad for Bitcoin. A recession, Bitcoin is very deflationary. So a recession is death for Bitcoin. Just like it was during COVID, Bitcoin just absolutely crashed. And then when they turned the money printer back on, it just came back like with a vengeance, right? That's the same sort of situation. So tough call there in cryptos, I think. I hope the man upstairs keeps those evil people out of office. I saw Cory Bush lost her primary. That's indicative of some shift on the left. Yeah, well, it really is. It's funny you dragged me right back onto that topic, but it's worth talking about, and you're bringing up a really good point, which is that right now it's like they're doubling down on the far left, the woke left. Frankly, like to me, Kamala Harris is like the best representation of the woke left. But when you're looking at the primary races that went out last night, it does not suggest that the Democrat Party is moving further left. It suggests to me that the Democrat Party wants to moderate itself somewhat. It's like here's the thing. Here's what I think is really going on. I think that when that debate happened with Joe Biden, they basically the powers that be, like the movers and shakers in the Democrat Party, the people that are really have a lot of power and influence in the Democrat Party, said, well, crap, we're screwed. We're screwed. There's no way that we can possibly win this now. That is just such a big mistake. Can't believe that we let this happen. This went really poorly, right? And so what do I do about it? How do I salvage something out of that? Well, we've got to go back to, we need to moderate a little bit. We need to go to the kind of more of a centrist party, even though that's not really what the base wants, right? It's the same base versus establishment sort of battle in the Democrat Party that it is in the Republican Party. And you got these people that are in power and they just kind of want things to stay the way that they are, and they don't want to rock the boat too much. Like, they want to say all of the things so that the people will vote for them, but they don't actually want to do all of the things because then that would hurt the economy, right? Those kinds of guys. So what do? Find a sacrificial lamb. Who do I not want to be president, that I'm kind of concerned about being ascendant in the future? Let's just put them in now. Let them have their chance. Let them fall flat on their face. And then the party will turn away from that direction. And we'll move back towards being the party that we were, like, back towards the Clinton view of things, right? Or maybe just back towards more Barack Obama. At least Barack Obama in practice, and maybe, because who knows what he actually thinks. Right. And so then you get Kamala. And I kind of am of the opinion that Kamala was probably the largest force trying to push out Joe Biden. That's my theory. Don't really have a whole lot to back that up. I guess there's kind of some whisper talk, but I think that Kamala, because there was these stories that like Kamala Harris and Joe Biden aides were like yelling at each other across the White House and stuff like that. Okay, so this is our only chance. We wouldn't be able to win in an election. This is our chance to take the hard left turn and show the party what the far left can do. That right? So they don't know that they're the sacrificial lamb, and they're gonna go all in. And so that's what's happening. Is Kamala Harris is the nominee. She turns on all of the astroturfing campaigns. They go full bore. And what is supposed to happen is she falls flat on her face, and then the Democrat Party goes more moderate next time around. I think that she's basically being set up to lose. Now, if that's true, what would we see? What are some kind of things that we can look at to see, like, is that what's actually happening? Well, first of all, she's going to try really hard. So, like, especially right now, at the very beginning and everything, it's all Kamala, and she gets to kind of set the narrative, and the media's probably going to go along with it. But if she's really the sacrificial lamb, then as you get closer, you're going to see them abandon it, right? You're going to see key people say, I can't vote for Kamala. She's just too crazy, right? They're going to kind of take the same approach that I do, which is like, okay, like, is Donald Trump the greatest person in the world to be president? Probably not. But, I mean, there's so many people who knows who the greatest person in the world to be president is. I don't know. But there are things that I don't like about Donald Trump. I don't think that he is like the second coming of Mustache Man, but there are some people that think he's the second coming of Mustache Man. If I thought that he was the second coming of that, I would still vote for him over Kamala Harris, because it's like, you have Mustache Man in power. What happens is he does something stupid and crazy, and then, there's a big war, and then he ends up killing himself. Whereas when you vote for Joseph Stalin, that stuff, you deal with that for generations. Yeah. In an election between Mustache Man and Joseph Stalin, I would vote for Mustache Man. I probably shouldn't say things like that. That's the sort of thing to get you canceled. But Joseph Stalin was a bad man. Caused a really put their society back 100 years, more than 100 years probably. Anyways, they're super far left, and the further on this goes, you're gonna really see like how far leftistic it is. They're trying to present them like, oh, they're moderate and this is fine. They're just, but you know, vote blue no matter who. No, I don't think that it's gonna work that way. I think that the Democrats are gonna lose that enthusiasm as it gets closer. They realize who their candidate actually is. Okay, Treasury debt buyback is scheduled for today at 1:40. So, you know, Stefan, I haven't really noticed those particular events have a huge amount of impact on the market. So they, you know, I don't ever see them scheduled on my news squawk. I know that it happens. When it happens, I usually do hear something on the news squawk, but it's not like on my calendar. And I don't see a whole lot of reaction in the treasuries because of it. Now, we do have a 10-year auction today, and that's a huge deal. Okay. So, should expect to see some large flows because of that. So far, though, I haven't really seen it. It kind of looks like the market is just in market making neutral mode with a slight positive bias. But, you know, we moved up, we breached the high by a tick or two, and then we came back to the open. So you might be able to make those 4 ticks on there. You might be able to take a long, and if you hold it long enough, make some money. But at the moment, we're not really getting very strong indications of strong flows in the markets that would result in a really good trend that I like to try and catch. Although, in a situation with central bank comments that we had overnight and a 10-year auction, that sort of thing can happen. Well, especially with the central bank comments. I don't know about the 10-year. The 10-year on auction actually tends to be sort of like they tend to sell into the auction and then they buy afterwards. I guess it can result in trends, but more often than not, it kind of turns into a bit of a mess. So it's like they try to start a trend and then some huge rate lock pops up and that kills it. So usually the way that works. It gives us a long session to kind of sit here and relax. Well, I'm kind of thinking about like, oh, maybe I should program or something like that. But I don't think I will. I think I should stay focused on it, even though I don't think too much is going to happen. Have you read? I've never heard of that book before. A VWAP? I don't know, but I've gone into the VWAP thing many times. I'm very skeptical about the actual use that VWAP has for us in our day as retail traders. So, yeah. If you got a few what is that? MIIS? The open position in something, then VWAP makes sense for you. Listen, you can backtest it. Like, does it touching the VWAP or it bouncing off of the VWAP or any of those things result in a profitable trade? It doesn't. You can backtest it. The VWAP was a way that they would execute large orders by, if it's below the VWAP and I'm trying to buy, then I'm going to buy more aggressively. But there was problems with it because then it's like everybody knows that you're going to buy, and so they just keep pushing it up, and then you're buying too slowly. And alternative strategies came along that found that you did better if you just timed your entries, broke your entries up enough so that it reduced the impact on the order book and just ignored the VWAP. Right? So I don't really think it helps you. There are definitely battles that go on with the VWAP, but that's like the whole thing, is that like, because everybody's battling on it, that kind of makes it not very effective for us as retail traders. Well, they came back up there to the highs again awfully quickly. That was like only like, what, 2 minutes, and they were right back up there. They are above like the opening range too, so like, I think it's still a little bit iffy. If I was forced to make a trade, I think that it would be long, but I don't feel confident in it. I really got to be in a situation where I'm expecting a strong flow to come in that's going to continue to push us up and trend us, and I do not feel that degree of confidence in what it's doing. I'm sure you do. But is it actually useful? I don't know how to say this, like, in a way that like really will move you. I don't care about it, and I don't find it to be useful. I used to be obsessed with the VWAP, and I've done a ton of different backtests with it and that sort of a thing. It's overhyped. Like basically waiting 45 minutes has more edge in it than the VWAP does. See what I'm saying? Like looking at something and saying, oh, well, I think we should be able to move up, but it looks like we've built a hole, so let's wait 45 minutes and then we'll see the next leg of it. That has more edge than the VWAP does, and saying, like we're going to continue to move up or down or whatever, for determining the direction. It's not effective. Maybe the approach that I should be taking to try and convince you here is technical analysis is almost completely useless on an intraday basis. It's almost completely useless, guys. Whatever it is that they're talking about, indicator this, indicator that, like if it's an indicator that's based primarily on price, probably not going to work very well for you. And when you start getting into volume sort of stuff, like VWAP, there can be edges there, but you're going to have to dig, and they're going to have to be pretty sophisticated. And just, oh, here's a line, is it going to bounce on and off of that line? Like even on I have an indicator here called the inventory cost basis. And the inventory cost basis tends to be an extremely effective line. The number of times that you will see price bounce off of this line in key situations is just absolutely insane. But when I go and I backtest it, and I say, okay, so when it comes to this line, I want to buy it, or vice versa, doesn't work. It doesn't work. So basically what I'm saying is, this is the best line you could ever possibly have, and it doesn't seem to give you a systematic edge. Doesn't mean it's useless. I have it on the chart there still. But if the basis of my trade is, oh, well, it's at that line, then it's probably a bad trade. So what's something that's useful for predicting things? Because that's basically what you got to do. Is you got to predict things. You got to predict that prices go, predict future returns, essentially. So how do you predict future returns? You predict future orders. If I buy it, I need the future orders that are submitted to be submitted in a way in which price moves up after I get in. So I have to predict future orders. And turns out that how close we are to the VWAP and all of that sort of thing is very ineffective at predicting future orders. But some things that are pretty effective at predicting future orders are things like, there's a 10-year auction today. That's the best thing that we have. Best thing that we have is that there's a 10-year auction today. So what does that mean? Well, that means that there are going to be these people out there that are planning on buying some treasuries today. And depending on what interest rate they want to get from that auction when they buy the treasuries, they are going to come in and hedge their positions, long and short, using the futures. Because they're basically saying, like, well, I need to get this interest rate, and the interest rates are going too high, so I need to buy it here to, or I need to sell it here to protect myself against the interest rates going too low, or vice versa, right? And so you will tend to see over here in the 10-year treasury, huge icebergs. Like, it's very common on a 10-year treasury day to see a 10K iceberg somewhere. There 10,000 contracts go through and they're not able to push through it. Unfortunately, that doesn't give us a clear direction. It tends to be sell into the auction and then buy afterwards. Tends to be. But as of late, it's been not so much on that pattern, because it tends to be either the auction went really well or the auction went really terribly. Right? So unfortunately, I'm able to predict future orders, but I'm not able to predict future orders from that particular piece of information in a way that gives me an outright long or a short position. Right? It actually kind of says we might be a little bit constrained in back and forth, which is what it's been so far, right? And so I don't take a trade. So actually, the truth is I'm predicting the orders in this situation really, really well so far, and it just so happens that the prediction is that it's going to be mixed and that there's no trade in it for you, and we've been correct so far. You see how I did that? But sometimes the piece of information that you have tells you just outright that people are going to be buying or selling, and then you have a trade. Those are things that are predictive of future orders. VWAP, not really. Not really. I anchor the VWAP at the session high and low, and then use a break above or below those VWAPs as confirmation. Well, okay, that's kind of an interesting way of taking it. I suppose we could backtest that too. So I do not have an indicator. Well, I mean, I have everything set up to do it, but I don't have like a cached VWAP to backtest with. We could set that up so that we could do really fast backtests, and then we could do something like if Well, so one of the problems that you have in a system like that is, okay, when you break a high, okay, sure, but you break a high many, many, many times, right? And you don't know if that high is like actually going to be the high of the day, just that it's the high of the day so far, right? So you set something up like, I take the high of the last 2 hours, and if we just breached the high of the last 2 hours, then I set it. I set my high and what my VWAP was at that high, and then I wait. And if we have a period where it was below that and then it's breaking through it again, then I take the long. That could be like, but I think the problem that you're going to have with that kind of a setup is like, if it's a trending day, it's going to work really well. And if it's not a trending day, you're going to get destroyed. Because what will screw that sort of a trade up? Well, right now, the high was 05 or 06, and the VWAP was at 04 there. When we were at the low, it was like 02 half. So like, what if the treasuries sell, they go down to 13, tag 13, and then reverse and go all the way up to 06, then that strategy is not going to work very well, right? So again, tends to work a lot better to just be able to say, I think in the next 30 minutes that I'm going to see a lot of orders come in with a net imbalance of 10 to 20,000 contracts to the long side. Ergo, I want to go long. That's a better trade setup. That's the sort of thing that we want to be saying if we're going to take a trade. I'm mostly on ZB looking at the ZN. It seems like it does a 4-tick price test. Well, so what happens a lot, because the treasury is such a thick tick instrument, is that liquidity holes are actually really strong because of that. So typically what that means is that it will stay in a 1-tick range. Or a 3-tick range if you're looking at it under chart. So it would basically be like this 14 half. Oh, okay, maybe it's 04. You know, they'll tick down at 04. So now 04 is offer. Some trades will go in at 035. So you'll see 035 touched on your candlestick chart or whatever the deal is, right? But the truth is that like all of the volume is going off at 04, and they're just ticking back and forth across 04. And they're never able to get enough orders to push through the 03 half and tick into 03. And so you just get this thing on your chart, like these sorts of things, right? Where it just, and this is why a lot of people hate the treasuries, is that you'll just get stuck in a range like that. Okay, well, what causes that? Well, it could be caused by like there's just nothing going on. That's probably what caused that one, is it was just really early. But like, you're kind of getting that here, right? You're kind of getting that here. Why is that? Well, because you've traded so much there. The people that wanted to trade and wanted to provide liquidity at that location, they've already done so. And meanwhile, the people that want to provide liquidity above that to sell it, they're going to still be there. So it's going to be like that, right? It tends to be like the most liquidity just a little bit outside of that range, right? Let me redraw it. There's going to be like right here. There's going to be lots of liquidity, right? And then same right here. There's going to be lots of liquidity. And then when you come here, there might be a jump, but something like that. Okay. So that what it means is it's really easy to tick price right in here. It's really easy to tick price in here. And it's really hard to get it out of that. There's going to have to be a really big imbalance. There's going to have to be a lot of orders to come through to push it outside of that range. That or a correlated instrument that moves, like the Japanese yen moving, and we just follow the correlation. That could also cause us to move, right? So it's a liquidity hole, and you just get stuck. But it can actually be really incredibly useful. For one thing, when I see that form, I can pretty much already say like, oh, okay. It takes like 45 minutes for those things to kind of like heal and make it so that you can actually like move around more freely again. So like, we're probably going to be stuck in this area for 45 minutes. Well, this started at basically like 10 minutes or so after the news. So it has been 45 minutes. And you can see that we are starting to test the downside a little bit. Like we tested the upside, we're starting to test the downside a little bit, is what's going on right now. So now that we know that, now it's kind of, how does that help us? Well, now I know, okay, the context of what's going on. They're testing the lows. If we get a really huge imbalance, there's somebody that really needs to sell, then we're going to bust that bottom side of the range and it's going to be off to the races. And you're going to see there's going to be a lot of people willing to provide liquidity there, but the sell orders just keep coming and plow through it. Otherwise, we're probably just going to continue to stay in that range and we'll turn around and we'll test the other side of it. Or the other scenario is something comes into the Japanese yen, pushes the Japanese yen down, and that causes the treasuries to go down. Which is probably our better trade. At the moment, the Japanese yen looks really quiet, though. So that's how I approach it. That's based off of an empirically proven behavior in the market that we know exists. So I want to try and approach this from a different direction. Okay. Intuition. Intuition is being able to understand things or make decisions without having to use conscious logic. Okay. So I might come in and I might say, like what I do here, when I do this analysis and I say, here are all of the flows, here's how big I think that they're going to be. And then when I kind of do all of the math and everything, does that result in some sort of an imbalance? And I'm using logic to try and to say based on this and this, and, especially if I'm going through like a set pattern, right? I'm using conscious logic, but that's not the way that most people work. Most people look at it and go, oh, I think that I should sell it, and they sell it. So what is that? That's intuition. Well, what is actually going on when you have intuition? Because people will say, oh, well, that's just like trusting your gut, right? For instance, there's almost like this mystical thing. Your stomach knows which way the market's going to go. Does that make any sense? Well, but there are bacteria and stuff in your gut. Anyways, I'm going to get into that bit of it. But what is the actual like real process that's going on when you make those kinds of decisions? Well, what's going on is it's a neural network. It's a neural network. So every time that you experience things, you look at the market every day and you have an experience in the market, there are cells in your brain that are making new connections and changing the processing that they do and all of those sorts of things to be able to make decisions in the future. Basically what it does is it says, what is my end goal? What do I want to have happen? And then I adjust all of my cells until the neural network gives me the correct answer across like my whole data set. So like your cells will realign themselves and then they'll test it. This is kind of like dreaming. It's like, okay, in this scenario, would it do this? This scenario, would it do this? No. Oh, okay, that's all correct. I think that I have a pretty good model. And that's how your brain works. This is the same way that ChatGPT works. It's the same way that ChatGPT works. They ask it a question, it gives them a couple of responses, and then they give it feedback and say, well, we like this one better. And so then the ChatGPT goes in and readjusts all of the weightings in its neural network to give output more like that. And that's how GPTs work. GPTs are an intuitive system. It's a machine learning system that is basically intuition. Okay. So now that we understand what intuition is, I think that you can see how intuition is going to be really beneficial to a retail day trader, especially a day trader, right? Because if there's some sort of a pattern that's just like, okay, every time that we come up to this line, I'm supposed to go short. And overall, I'm going to make money because it tends to go short there more than it does continue through that line, or whatever the deal is, right? That's not intuition at all. That's just the systemic. But those things, they don't work because everybody can see them. They treat them. They're already removed from the market. So in order to find like a real edge, you have to do things that are a lot more complicated. And our intuitive systems are able to understand and do things that are way more complicated than we are able to understand consciously. And they're very quick. It's like the answer is baked into the network. So you just say, here's the situation, and it just spits the answer out almost immediately. Okay? Speed is a really big part of day trading. So having intuition is very useful for day trading. All right. If that's the case, how do we build that intuition? Well, think back on the ChatGPT thing. If I base my entire ChatGPT on comments from Reddit, then what's going to happen? I'm going to have all of the same biases and do the same stupid things that people on Reddit do. And I might not have a very good model. I think in the case of ChatGPT, for a lot of situations, works pretty good. But I probably wouldn't use ChatGPT to try and sort out your political analysis, for instance. Because it's like garbage in, garbage out, right? Now apply that to trading. If I'm coming in every day and I'm watching the market, and I'm looking at indicators, and I'm looking at the news, and I'm looking at all of these different things, okay? And the things that I'm looking at are the things that my brain is then going to encode into that intuition system. So if all I do is pay attention to the VWAP, then all of my intuition is going to be based on the VWAP. And the problem is that if there's not actually anything really there to it, then all of that intuition that you've built is completely useless to you. And that's where you get the traders that they are constantly failing. They go and, I'm going to change this and I'm going to change this and stick to my plan more, etc., etc. Still doesn't work. They still make the wrong decisions. Why? Well, because a lot of it is intuition. These rules aren't as, have a lot more room for interpretation and so forth than people realize. You're using a lot more intuition than you realize. And that entire intuition is based on things that are like completely incorrect. Some people will get lucky. And they will pick up on something that really is useful, usually the news, and they don't realize it. They might think that they're trading because of a moving average or something like that, but it's actually their intuition knows which way it's going to go because of the news or whatever the thing is that they're looking at, right? Okay, so what you consume matters. What you look at matters. That's all being constantly encoded into your brain. I was having this problems with my kids. If all you do is you sit and worry about things, then that's what your brain is going to encode. You're going to have an intuitive brain that's all focused on finding something that's wrong, even if you aren't actually doing anything and there's nothing wrong going on in your life right now. It's going to see it because that's what you've trained that model to do. So when we are day trading, if we are day trading using discretion and we're day trading, you really need to be sure that the things that you are looking at really have real use. And if the things that you are looking at is just like some theory, some guy on the internet thought that this would be useful and put it out and you did it, like I will create indicators and you can use them. And I do not intend you to put that indicator on there and then just look at it every day and hope that you figure something out. I'm giving those to you so that you can try and do backtesting yourself and research yourself to see if you can prove that there is some sort of a market inefficiency there. Because the issue is that if there's not, and that's what you're paying attention to, your brain is going to start encoding that, and it's useless. And the longer that you do it, the worse it becomes. Because now, let's say that your whole thing is moving averages. So everything that you've done is moving averages, and then after 5 years, you're not having any success with it. And you say, you know what, guys? I don't think that moving averages are very effective on a daily basis. Well, guess what? You have already trained your brain to look at that. So you've wasted 5 years, and now you're going to have to completely reprogram your brain, because those are brain cells. There's like physical manifestations in there of what you've been doing, your thoughts over the last 5 years that you're going to have to like reprogram. That's super hard. And the older you get, the harder it is to do that, because you lose your neuroplasticity. So if we want to build intuition, the first and I would argue most important, but I don't know, maybe think this through. I'll write a script. Maybe that's not the most important, but I think one of the most critical things that you can do is to ensure that the things you are paying attention to the most are actual real inefficiencies, behaviors in the market that matter. Okay. So looking at the market, we know that the auctions matter. Okay. We know that there is behavior in the markets. There are studies out there, peer-reviewed studies, that show that treasuries tend to sell going into auctions and then buy afterwards. Okay. We know that there will be hedging and large orders on those days. There's a bunch of things that we know based off of an auction. So it's good to look at the auction. It's good to watch all of this, and in your mind you're thinking, today is an auction. What are the flows that I'm expecting to see? Today is an auction, right? It's also really important to have the right goal. So that's why I constantly say you're trying to predict orders. Okay, because sometimes you might make money, you were lucky, and then the brain encodes that and it might encode bad information, right? So the more accurate thing is we want to predict orders. So here's all of the things that I'm looking at, and then what is the flow that came through? And then you start to build this intuition about what the future orders are going to be based on that. And that's how I do this. This is how I'm able to come in, and I might not take the trades all the time. I don't think I trust my intuition as much as I probably should. But you'll come in here day after day and hear me say, well, it's kind of think that we're going to see this, and then it does it. And you're like, how do you do that? Because I've built that intuition about what the orders are going to be based on things that we know actually move it, instead of spending all of my time trying to sort out some technical analysis system that might just actually be random. See what I mean? So it's not like, hey, it's impossible to make money from technical analysis on an intraday basis. I'm sure there's probably people that have done it. It would be really hard to control for like they were actually making money from an edge in the technical analysis versus they were taking on risk. That's one of the biggest problems that I see out there, is that you can make money from just taking on risk, and so people base everything off of that, taking on the risk. And then the problem is that if your only edge is taking on risk, that is you will blow up eventually. You have to have more than just taking on risk. Okay, it's not an effective long-term edge. But that's why anytime that you guys are going to bring up certain technical indicators and things like that, It's not that it's impossible for it to be a thing. It's just that if I don't have data to prove that it's a thing, I believe that it's actively harmful to me to sit and spend a lot of brain power thinking about it. Do you see? I just taught you how to learn intuition. We're going to make a video about it. How do you code discretion? Well, what you got to do is, so to code what I do, super hard. It would be so super hard. But I think that where the difficulties are in that are not where you expect. Like, how do you code the discretion part? Super easy, actually. You need to have a goal. You need basically some way of saying, okay, I put information into this network. The network spits something out. How do I rate that response that I get out? Well, in our instance, what we want out is what the future orders are going to be. And so we can rate that response based on how close the output was to the actual orders that we then saw in the market. Okay, so you have to have a goal, and then you have to have all of the information, all of the inputs, and you just go in and you just have a ton of data, and you just pass it all into the machine learning network, and it will sort it out and it'll spit out the answers, and then you've got a GPT that's been trained intuition on trading order flow, essentially, right? So, and that is like, there are frameworks out there and everything to do a GPT. So like all of that complicated processing of like building the neural network and adjusting the weightings, and that's an algorithm. Somebody's already figured that stuff out. So the hard thing is actually the data. How do you get enough data to say like, here are all of the pieces of information that you're supposed to be looking at every day, right? Because that's going to be like things from a news squawk and things from the schedule and what we know about momentum and other various institutional strategies. There's just like a huge long list of all of these things. And for each one of those things, finding data for that to be able to pass into your robot to trade off of it is going to be hard. Cleaning that data up, all of those. So it's actually a problem of data. It's actually a problem of data. You as a person, you can just go around and browse the internet and encode it. And so I don't even know if it's actually worth it to try and like automate that. Because it's just going to be like more trouble than it's worth. And it's probably not going to be as efficient as the person. Right? But the reason that we want to automate things is like, there's a bit of randomness involved with people. There's, like we can't verify things with people. You can go and you can teach two people the exact same strategy and they go and they execute it completely differently. So how do you know that like the strategy actually works? You have to make it systematic. So you can like strict rules and so on and so forth, right? So backtesting, systematic trading, super useful to try and test ideas and prove them. But what you're going to find is that any system that you build like that on an intraday basis isn't going to work very well. Unless that strategy is, I'm at the front of the queue and I'm watching a correlated instrument and, I'm the fastest one. You're your market maker. That's the only strategy that I know of on an intraday basis that like a systematic strategy that works. Okay. And you have to be fast to do it. So, it's better to build the intuition, and you're only using the backtesting and everything to verify things so that you can find new things to put into your, to build your intuition with, but to be sure that you're actually putting things in that are good instead of garbage. Is the seller about to finish in the bond market? Well, I don't know. It looks like that we are getting more selling coming in. And in fact, it is starting to cross some thresholds for me where I might be able to take a trade. Interesting. Interesting. Okay. So what was going on there was we are approaching like a low and we're having some key levels. And I'm noticing that over here in the micros that the market makers are kind of shifting around a little bit. And I thought, okay, will they if I put a bid here, because there's nobody else there, if I put a bid, do they fill it? And they didn't. Which suggests to me that they are all kind of, you know, going short the treasuries along this. I'm not going to get 935. I basically, I may have to, well, I might be able to get 936, but I'm probably not going to get 935. And if I do get 935, the situation has changed. And I put a test order out and they didn't hit it. And I'm starting to get a little bit of an increase in level 2 activity as well. And about 10,000 contracts net short here since we crossed 02. So that's a big iceberg right there at 01. Well, that concerns me. I don't like that. Okay. You might still be able to get a trade off of it. You might go a little bit further, but that was a lot of liquidity. So again, it's an auction day today, right? So we expect to see really, really big icebergs on an auction day. Well, there was one at 01. That could be enough to stop it here. Let's see. Let's see if that's what it is, or if there's really a strong seller that's really got a lot more to sell. I think that it could be, because you're probably going to continue to see risk come out of the market, and since the Japanese yen was a sell, this is a sell. S&P 500 is moving up as well. Micros didn't react as strongly to that downtick. Let's reset it. I am seeing a little bit of flattening as well. So that flattening and moving down, that's kind of all in line, so that's good. Huh. Maybe they're trying to bait them. Okay, that time I tested it and they hit it. But that's probably because the range is still from 936 to 938, so. It's okay though, I could probably offer out and get out if I wanted to. So how do auction days affect equities? So most of the time, they don't really affect the equities too much. But sometimes you will have an auction that is incredibly bad, particularly if it's really bad. And then that can have a knockoff effect on treasury, on equities. Like you'll be coming in here, the auction is at 1 o'clock Eastern time. And then at 1 o'clock Eastern time, you see a huge dip in the treasuries, right? Then that tends to scare the guys in the equities. Not a super common thing, but it has happened in the past year. In particular, in the past year, it's been a problem. So I'm scared of doing manual backtesting due to confirmation bias besides algo trading. Yeah. So I've seen a lot of people try and claim that backtesting is like pulling a chart up and then just saying, okay, if I do these rolls, what happens, sort of a thing. And while there is some kind of use to that, because that's kind of the beginnings of how you program a strategy, the actual act of like going through on a day and backtesting it like that is completely useless. Yeah, because there's so much confirmation bias involved in it. So there's all these people saying, I backtested it, and you find out that backtesting it is basically going back through like a week worth of charts. Completely useless. Doesn't prove anything. So like one of my biggest pet peeves right now is people trying to claim that that's backtesting. Manual, if you're doing it manual, it's not a backtest, okay? A backtest implies doing it systematically and programmatically, frankly. It's kind of funny because going back to the intuition thing about it, you know, like what people are doing is they basically, you've learned things in school and stuff, and you know, oh, they say that statistics are really important in trading and so forth. Okay, so maybe they've read a book that some like a momentum trader wrote or something like that. So they say, okay, so there's some sort of a setup that I'm looking for, and you know, it comes out this way X% of the time and this way X% of the time, and I make this much when I win and this much when I lose, and that's how I'm trying to work it out, right? And the problem is like when they go in and they use the intuition, because they don't actually understand enough about the statistics, they get it completely wrong. They go through and they're like, okay, so I'll go through and I'll do like 100 test trades, and then it comes out that 55% of the time it goes up. Okay, so that means that if you like do 100 trades, that there's only like 10 trades that were actually like the difference in you winning. So like if you do that again for another 100 trades, how confident are you that it's going to come out to that same amount? Because I wouldn't be confident at all. Like the margin of edge that you're getting there is so tiny. It's statistically, it's within noise, frankly. So once you get into that, then all of a sudden you realize, oh, in order to really prove that there's like a real statistical inefficiency in the market there, you really have to have a lot of data. Usually more data than you actually have. Yeah, usually. And now you can kind of understand why retail traders make the mistakes that they do. Because they're basing it all off of this one tiny thing, and then they, you know, it's just noise, and then they make the conclusion off of it anyways. So the proper way to backtest would be code it. Yeah, yes, but then what is the point of manually trading if you can automate it? I believe forward testing for intuition / well, yeah. So you can. Well, I think that what's going to happen is this, especially if you're doing intraday trading, is you're going to go and you're going to code it, and you're going to find that it doesn't work, that it's noise, right? Or you might find something that where there does appear to be something to it, but it's just not enough to make money from it, right? So then that's something that you can kind of start looking at and including in your intuitive analysis. Okay. So I'm gonna take the 5 tick loss on that, even though it's kind of coming back. Now another approach is this, Eric. When you move to a different time frame, the game changes a little bit. All of these books, all of this stuff that you've heard about, technical analysis and these people making tons of money from all of these things and trading and yada, yada, yada. we're just assuming that they were day traders, but most of the time they were swing traders. Most of the stories that you've read, most of the books, like the Jack Swagger books, these books about past profitable traders and so forth, almost completely about momentum traders in the 80s and 90s. Now, that particular strategy, the performance of it has started to become a little bit spotty. It made a ton of money during COVID, and so then you had a ton of money come into the CTA space running those kinds of strategies, and then since then, it's underperformed the market like big time. So I'm kind of wonder if maybe that space has become too crowded to play in. But basically, these guys are doing the same, like super classic, actually, in some cases, super classic kind of setups, like cross of, new high, cross of a moving average. Is this moving average above this moving average, right? The difference is they're running it on a daily chart instead of a 1 minute chart. And when you do that, you can get completely different results. And that is something that you can factor into your day trading. You can come in and you can say, oh, hey, my momentum strategy on a daily basis is triggering along here. So I should expect to see that there are people that trade on that, and I might see that flow come through. You might not have enough capital to deploy a momentum strategy, but you can still kind of utilize it in your retail trading, essentially. Man, I really feel like I'm getting tossed around a little bit too much there on that one. Because, what was it? Well, it was only 5 ticks. But it came right back almost immediately. I think, though, so I'm tempted to get back in, but I need to remind myself when I have that happen, I should wait. We are forming a liquidity hole. So I got in at the beginning of a liquidity hole and got scared out of it. Also, we have news in 10 minutes. Not that it's significant news. But so, like, basically that did not disprove, like, my larger kind of feeling that there is a large meta order sell and that we could have some continuation of the selling, just that my timing of it was wrong. So we're going to wait maybe 20 minutes and then I can take a look at if it's worth trying to take another shot at it. We did see the yen move down a little bit here as well, by the way. I am seeing the 30-year bid up there, but we are flattening. So I think that you have to discount that a little bit. The order flow long in the 30-year, because it's going to be buy the 30 and sell the 5. Let's hope not more selling. Well, it kind of feels like, I don't know. I would say that it's been a relatively constrained day, but it does seem like it's the sellers have it. I don't know how far they can get with that, but it does seem like the sellers have it. So I think that what's going on is risk premium is still kind of coming out of the market a bit. Bank of Japan's message shows how markets keep bullying. That's Mohammed A. El Arian. Shows how markets keep bullying central banks. Yeah. I'm not a huge fan of what I've seen in the Japanese yen overnight. Because, like, I'm kind of like, hey, you did the thing, the big bad thing happened. And then they were kind of chilled out. So, like, let's just let it simmer for a little bit and see how it goes. But no, like, they're almost immediately capitulating. that kind of sounds to me like you're giving them an open signal to go short the yen and take it right back to the year's lows, you know? I know where that one ends up going, and I don't like it. I don't like where it's heading. Yeah, so back to the high end of the range again, but dragged up by the 30-year. I'm just gonna come in here, do a quick peek around. Goldman pours cold water on emergency rate cut hope narrative. Well, given that the market is currently pricing a 50 basis point cut, that means that the treasuries would have considerably lower to go. All of my profitable algo bots swing trade on the 1 hour time frame. Neither I nor anyone on my team has managed to create a long-term, robust, profitable algo for scalping. Man, I think you could do it, but I think that you would have to incorporate sources that are super hard to get programmed right now, you know? Hence, there's still room for trading on intuition on an intraday time frame. But even then, like, the amount of money that you can make from doing that is it's gonna be rough, right? Well, so they are defying me a little bit here because they did just trade into 113 even before the news. Now, given that it's a huge round number, that might have been a little bit of gravity that I should have considered. But hey, okay. Now, if they continue through and the momentum keeps going, then I'm gonna be like, what's going on here? Because, like, if I'm taking a trade, Goldman says the emergency rate cut hope narrative is not going to happen. Ergo, I should sell treasuries. That totally makes sense. But why would I do it 5 minutes before a piece of news? Right? Granted, it is a piece of news that's usually not super big. It's really hard for me to sit on my hands. I want to get involved. Pitu, how are you doing? I need to just relax for a little bit. S&P 500 buying there up to a new high again. Is there any other moves? Oh, the oil has been moving a bit this morning. I think not. Also, what I'm seeing here in this zone in the treasuries looks mixed between the different treasuries. So that's usually not super indicative of, like, there's going to be a huge downtrend that's going to sweep through here now, right? So that should make me feel a little bit better about sitting on my hands here for a little bit. But there's 394, so I don't know. Okay, uptick again. Portfolio already recovered from the big crater? Well, you know, it's going to be really interesting if you're talking about your portfolio in particular, right? It's going to be really interesting to see how that goes into the end of the year. So like Goldman is saying, well, they're not going to do the emergency rate cut. Maybe they're not going to do a 50 basis point cut. So it's probably going to give some of that back, right? And then what does the rest of the portfolio, the stocks and everything, do the rest of the year? You know, it'll be interesting. It'll be interesting. Pay dividends, yeah, maybe. Okay, that uptick really hurts the downtrend. You could kind of see, even though there's not a lot of, they didn't hold the bid. There's only a little bit on the offer there. But when it ticked up, I saw a lot of changes up in here. So that uptick kind of upset a couple of algos and made them be like, okay, it's not like strictly down. Okay, but here we got IVPMI. Not hearing anything on my news squawk, but again, this is usually not huge market moving news. It's just, it's the best we got today, you know, so like, They released on Financial Juice before the timer finished counting down. Is that really? Oh, yeah. But you're right. It's 57.6 versus a previous reading of 62.5. I don't have a market forecast for that one. But my news squawk does not think it's important enough to mention. But, you know, now we do have it through. I'm kind of back into where I kind of feel like I could maybe start thinking about making some moves. I'm a little concerned, though, because the 5-year is kind of giving me some hints that they want to just retrace it. So I don't know if another short makes sense here, unfortunately. Yeah, and that uptick at 0.2 is... So 0.2 half would be like clearly breaking the range. Nobody's tagged it yet. It'll only take one order. There we go. Okay. So, I'm not trying to say, oh, breaking the range right there is significant and changes my opinion or any of that. But it is a potential trigger point. And so I'm looking to see, okay, so now that they did that, is the book doing anything differently? Doesn't seem like it is, actually. So that doesn't give me a lot of confidence in like a reversal trade. But does kind of make me think that we will kind of just like continue to be a range-bound market maker kind of market around the VWAP, essentially. But let's see. For all we know, that's like the perfect opportunity. Go short, and then they're going to push it again. let's see. I am rather seeing the Japanese yen come up here as it does that. So, and the dollar is moving. The dollar is doing something right now. I'm not sure what the driver. It actually kind of seems to me that the euro is actually more driving it right now. You think that there's a lot of sellers trapped at the bottom? Well, probably. Well, so we got to be careful with those sorts of things because we don't know why those orders were necessarily being placed, right? Those orders could have been speculative, but those orders could also have been rate locks and hedges for the auction, right? So like if I'm hedging short and my hedging short pushed it down to that 113 even, and then I finish, you should expect to see a short-term mean reversion period where it kind of equalizes back out. And then after that, it should just like not do anything. Right? And expecting my orders that I went short to like, you know, I'm trapped and like I have to now buy the high or whatever. Well, but if I'm hedging in all of that, then that doesn't matter. Right? So we may have to try and read situationally into those sorts of things to be able to determine those situations when you're really likely to catch those people off sides, right? That when it's really was speculators pushing it. At the moment, I'm not feeling that. You know, I think that if that's what was happening, that they'd be reacting a little bit more to touching 0.2 half. 0.3, right? Because I think where I'm stuck at right now is like, okay, so how can we explain the flows that we've seen so far and how in line are they with what we expected? Well, I expected there to be a little bit of a mix with the possibility of some trends breaking out on either side, especially to the downside because there seems to be some risk premium built into the market that I think needs to come out. Although I'm also kind of wonder about, you know, the Japanese yen. Oh, well, I don't know. I'm not quite sure what the scenario is where they go up. There's some other risk event or something. I'm not sure. Maybe the auction. Could be, but some buying pressure. Okay, but on the downside, if I'm hitting the downside, I'm thinking either one, that's just traders trading and the market doing its thing and they've just kind of extended the range a little bit, or I'm getting a really strong flow based on like somebody taking a short because the treasuries need to come down a little bit because the Federal Reserve isn't going to do a 50 basis point cut or something like that, right? So in that, you know, if that's why the selling was coming through, I don't think that I should expect to see, you know, a really big reversal from trap traders and that sort of a thing. S&P seems like it's not going to move too much today, so I'm going to take a nap. I don't know. I mean, it's been going pretty good today, man. I think that the S&P 500, well, let's see here. The NASDAQ is up 2.25% today. That's really good. ES is up almost 2%. And that to me is not it's not doing anything. And on top of that, we've moved 25 points just since we opened. So don't take a nap. Keep watching it. Not necessarily saying that you're going to get a trade or you should take a trade, but I think that you are going to probably gather some useful information about the current market. So, for some reason, I am still feeling short, but the order flow data that I'm getting right now does not support short. So, I kind of think that if I do get a short, that I'm going to have to just be like super late to the trade and maybe I get my 5 to 10. Or I'll just kind of have to hope that there's enough left out in it when I catch it. It will expire on the 9th of... What are you talking about? $9.35 was kind of where I originally was like, that would have been a better price. How many ticks for a point in ZN? Well, so for a point, so for it to go from like one, right now it's 113.01. So for it to go to 114.01, that's 64 ticks. So that 01 is actually... It actually means, that means 1 30 seconds. But then it's, like at 01 half, that means 1.5 30 seconds. So it's actually, it's actually 2 plus 1. It's actually 3 64s. Does that make sense? How many points? Usually you don't get a point move is like on a good session, we'll move a full point in a session. It's really easy to confuse people with that. The only thing that I would think of it is that, when you get to 31 half, then it goes back to 0, and then half, 01, 01 half, 02, 02 half, etc. And a tick is worth 15.625, and that's all you need to worry about. Get that ironed in your head first, and then you start to get into the math about like it's actually a 64th, and how much is that, and all that sort of stuff. But day traders, you don't really typically have to worry about that sort of a thing. If you had a portfolio, you were going to do a bond offering for yourself, for your company, and you want to hedge yourself against changes in interest rates. And so you have to calculate how many futures you need to buy to be able to hedge that future bond offering. Then those sorts of things matter, because then you have to be able to say, okay, so what is the value of one treasury? One contract, it's 100,000. So what is my how much am I going to offer? And so how many treasuries is that? And then if it moved this much, how am I going to make or lose? Yes, the full point is $1,000. So a tick is 1,000 divided by 64, right? Where is my calculator? 1,000 divided by 64 equals 15.65. Iceberg at 01. I think I'm getting a little antsy because I want to take a follow-up trade, but I'm not sure if I'm going to today, to be honest with you. That iceberg right there is probably could get price pinned a little bit. Maybe we could bounce back up to 03, but I don't think that the trade that I was looking for is going to happen. And you know what? I don't think that I executed it very well. I think that I probably could have gotten out of that scratching at break even rather than losing 5 ticks. But, oh well, it's okay. 5 ticks is $5 isn't a big deal. And I don't really have to come in and do something. I mean, if it's, because what I'm seeing right now kind of suggests to me that that super trend to short that I thought was maybe going to come through is not. So it's weird how the VPOC. Well, I've never really noticed that the markets actively do anything when the VPOC shifts. That alone, you're certainly going to see this thing that's kind of when the VPOC shifts, it's more likely to be in a trend and stuff. But I wouldn't say that that's a predictive thing, right? That's just kind of well, that kind of has to happen if it's a trend. It's coincident, not predictive. But we are so again. Remember when we were coming down, and then it came back to 02 half, and I kind of said, okay, so do I see a change after that? And I don't. So that kind of makes me think, oh, they're not going to do the reversal, but they may kind of consolidate around this. Well, now I'm seeing evidence backing up that consolidation because I've got large icebergs on both sides, almost 5,000 contracts on both sides. So that's indicative of two large players trading across each other, something that tends to exhaust the market makers and causes price to get pinned to that area. Yeah, shouldn't be any surprise, I guess, that 01 becomes the new point of control, but I bet you there's probably a lot more volume to trade in that location. Although we have been here since almost almost an hour now, so... And what am I seeing? The yen is buying. Now that changes things. It's buying. It's actually a significant upside in the Japanese yen. I wonder if Goldman Sachs doesn't buy into the bond market. Well, a large portion of Goldman Sachs' business is block trading for other people. Okay. They make their money from being a prime broker and doing block trades for people. Uh-oh, some subreddits could become paywalled hints Reddit CEO. You know what? If there was a subscription that allowed me into a subreddit that wasn't completely dominated by leftist groupthink and astroturfing, I might pay $5 a month for that. Or maybe as much as $10 to $20 if it was like a lot of subreddits. Because I keep coming down to this conclusion that a lot of what I don't like about social media is caused by anonymity, and anybody can come in and post stuff. So if you either get rid of anonymity or you make it more exclusive, it improves things a little bit. Because a viable Reddit alternative has not appeared, as much as I despise the general Reddit community. It didn't move still, but if you use options to hedge your one-side market making, that should be a good idea. Well, so market making options, which would include like potentially hedging inventory on the other side with contracts and stuff, can be a profitable strategy, but it's going to be about pricing, right? It's going to be about which prices did you get relative to that time, and that's why those tend to be in more of the high frequency trading nature again. You need to have some way of calculating what is the best price for me to give the options out at that provides some edge to you in some way. Is kind of the key component you need for a strategy like that to work. Basically, it's a complicated thing. It's much harder. I wish that there was a strategy in here that was just required no brain power and you just followed it and it always made money or something, but alas. Maybe if I was born 10, 15 years earlier. Okay, so that last little kind of touch, of course they came back really quickly, but that last kind of touch kind of created a new swing high. So you're actually kind of getting some degree of trend for the upside. Earlier I was saying, I still kind of wanted to go short, but the order flows are not backing a short up. Well, now I'm seeing enough order flow consistently going long to justify longs. If I had taken a short at, 3.94, $10, that would have been a legitimate trade because there was some degree of meta order. Right. I was saying, well, like right here, I was kind of like, not justifying me going short. Okay. Could I have taken it long? I suppose. It would have been hyper speculative now that you've got that much. I suppose I could justify long. if I really felt like I had a scenario that made me think, oh yeah, they're gonna buy this up, you know, like I knew something about the possibility of a risk headline coming through or something like that. But I'm thinking I'm still kind of leaning on the short side, to be honest with you. I think that my opinion, I don't know. I might just be crazy. You know what? We took one trade. I'm gonna let it sit for today. Sometimes it just takes a little bit to get me back into it, because you know your emotions get involved and that can kind of mess with my intuition. But you know, when I came in here, the Japanese yen central bank comments that caused the 6J to sell really hard, and they're positively correlated. So we should expect to see sell. There's a 10-year auction that tends to be selling into the auction and buying afterwards, and also tends to create a lot of icebergs, which we have seen. IVPMI was not anything in liquidity much improved. Yeah, it's pretty good. I'd say, you know, almost 3,000 contracts, so we're almost back to normal liquidity, so we can trade it. But that still kind of has me into, let's add in here. Risk sentiment coming out. I don't know what the right wording is there, but the risk sentiment is kind of coming out of the market. So, does that give me a super clear short? I don't think so, but I think it does probably give me slight edge to the sellers. Slight edge to the sellers. So I think that my intuition is in line with my kind of more logical analysis. So I guess that means that if I was really going to take a trade, it would have to be like seeing it come back up to 03 or above and then finding an opportunity to take it short. But what I'm seeing right now is probably enough to scare me out of any kind of trade like that. Coming to a pretty key, like a regular session high in ZB. So I should keep in mind the spreads. So I can discount this entire order flow to the upside because it is primarily coming in through the 30. Although I'm seeing buying all the way across the curve. Like the 5-year is buying as well, just not as hard. Uh-oh. Donald Trump Jr. says we're about to shake up the crypto world with something huge. Oh boy. They're going to do their own coin offering or something. That'll just drive me absolutely crazy if that's what happens. I don't like crypto. It really bothers me that Donald Trump is this time around going all in on crypto. Come and look at the markets. Individual stocks. Goldman Sachs up 2.83%. That's seems like a lot. Why would they be up that much? Is that a reasonable amount just based on the recent volatility? Yeah, look, CrowdStrike has had a little bounce. That's cute. Okay. Okay, yeah, based on the volatility, maybe it is okay. Oh, my rare earth elements is... Well, that's actually pretty normal for them. Cryptocurrency stocks still doing pretty poorly. Reddit, DJT not doing so well. So those two, that's pretty bad when the market is up like 2% overall on the day. Magnificent 7 mild, well, for the Magnificent Seven, that's mildly okay. At least 2% on a lot of those. My boomer stocks just kind of like meh. Ah, my new nuclear companies are up. CCJ is up almost 4. Oh, NewScale's up 7%. This little stock right here, man, continues to surprise me. Ah, I see. These are earnings soon. Earnings tomorrow. And up 7% is actually not that much for them. When this happened right here, I was so stunned. And it came back and was like, okay, let's see what it does. But it's just continued to trend up. And then I was like, oh, I don't know if I can jump on it. It's coming back to a reasonable level now, though. I guess I could buy it now. But let's wait for the earnings and hope that the earnings aren't like it 10x's on earnings, right? If it 10x's on earnings, then I might be pissed. Then I missed it. I'll be kicking myself. Could have bought it today if it 10x's on earnings. Okay. Consumer stocks generally okay. Sleep Number taking a hit. I really like my Sleep Number bet, okay? Super Micro got hammered yesterday and is continuing to take it on the nose today, huh? Let's put that one on SMCI. Oof. Although it's nothing compared to the rise that they had earlier in the year, right? Remember that one when it was like 350? It went from 350 to 1200 in the course of like a week or two? Oh my gosh, that's like a... You feel the vertigo, you're looking at that one. Your tech company's doing okay. CrowdStrike, up, but like mostly in line with the other companies. Copper's still doing poorly. Financials just kind of like 1.12% for Zion is kind of. I have it over here, the beta. Yeah, I should move the beta over so that when I get like the 1 day percent. Yeah, there we go. Okay, so evil companies. Who's the best evil company today? Fox? Okay, sure. Nike? Ooh, Bayer. Bayer's up 2%. Who's the worst, though? 5-2? Tyson Foods? Defensive. Okay. Interesting. Purdue says, yesterday I was waiting for timing to short, but I'm not confident today we'll have a big move. Timing to short the treasuries? Yeah, I'm still kind of leaning on you go short the treasuries. You're just looking at this over here. I just don't feel that the news that we've had really justifies us being up this high. I'm kind of wondering if this 50 basis point cut that the market seems to be pricing in it will actually happen. Because the economic data is bad and everything, because it's not, the economic models are still saying that the chance of a recession is low. So if that's the case, I think that the central banks are still going to be a little bit weary of juicing it too much. So, I would like to see a return maybe eventually to 112.16, for instance. as a key test on the downside to see where we're going from there, you know? Because for this to just continue moving up, for this to just continue going like, that would be awfully... I really feel like we need to be going into a recession for that one to make sense. So it's probably more likely to come back, you know. Oh my gosh, Seth is doing tech. Well, I did draw a thing on a chart, didn't I? But it wasn't because of any kind of technical thing, right? I was just... It was really kind of... The whole thing that started it was like, are they really going to do a 50 basis point cut? Okay. Well... I don't know. Today, I'm kind of like thinking back on the day. I kind of don't, I'm feeling at the moment that I wish that I hadn't have taken that trade, even though it was like a small trade and, you know, didn't lose too much on it and everything. But like, you know, I'm kind of looking at it like, yeah, this is a quiet range bound market again. It's getting too excited down at the bottom. Yeah. It's okay. I'm a little bit, I guess kind of the other thing is that I'm kind of thinking that that the rest of the week is probably going to be more like this as well, because there's not a lot of economic news ahead of us. It's not until next week that we get like CPI and stuff. So like, unless you get some sort of crazy geopolitical headline. Octavius is a small red for the day. You'll see, in this kind of action, I think it's really hard for us retail to make money. Like you basically have to trade against the flow to make money in that situation, right? What would the Bank of Japan, U.S. Treasury holding, and their actions with it do in the future as the rates are positive for them after such a long time? Well, some people are kind of saying that the Bank of Japan will give up its hike and it will take it back. So the book thickened up today for sure. For sure. You know, that's one of the things. If we had come down to like this area, but I had seen a substantial increase in the liquidity along with it, you know, like we had 3,500 contracts on the offers and stuff now, then I would have pushed a lot harder for a short. But what I'm seeing right now kind of feels more like mean reversion, right? Which should be short, but it's happening so slowly, right? He announced that due to the volatility of the hiking stops, but after the last decade, we might start seeing Japan with positive interest rates. Yeah, well, I don't know. Andre. The thing is doesn't this just kind of give the market an open invitation to just go short the Japanese yen and try and bully Japan with it? Like, that's what concerns me. I guess the moves that we saw overnight on that headline weren't as big as the pundits' reaction to it. But I still think it's a relatively significant thing. And I am kind of concerned about, like, it seems to me that the only way out of this is you have to have slightly higher interest rates for a really, really long time and mildly slower growth for a very, very long time that allows the debt to come off a bit. And if you raise things even a little bit and you're never able to get into that kind of equilibrium, right, then I think that it increases the chances that, you know, the yen just keeps careening lower and it causes problems on that side instead. When do you usually put on a live trade? Like, I've been watching your streams and only watch you. Yeah. Well, this week in particular, well, actually, it's more than just that. A lot of it has to do with the summer. Okay, I don't trade nearly as much in the summer. Like, I will typically take like 3 to 5 trades a week, but in the summer I might not even take one. I might take 3 trades in the whole month in the summer. It's way harder to make money in the summer, man, as retail trader. It just is. The liquidity changes and it's tight, and it does the things like it's done today. You know, it can be frustrating. When I do take a trade, I very much prefer to be early, right? Like, my ideal trade is I get into something around 6:40, 8:40 Eastern time, 6:40 my time, and just hold that the whole session and, you know, make $50, $70. That's like the ideal trade for me. So the earlier I can get in on the trend, the better. So I will tend to take them earlier. Or the really good ones, so I will take them earlier. But, you know, I'm not really super, like... You also got to understand that I've kind of come into this point where I don't care as much. I'm not sitting here being like, I really want to make X amount of money today, or, you know, I'm really reaching for these profit goals and that sort of a thing. I'm kind of more like, the market really has to force me into a trade. Like I'd have to be almost stupid to not get in and ride that whatever trend is going on. And those aren't every day. So, you know, and then when I'm not doing that, we're still streaming, we're still gathering useful intelligence about the market and talking about things and building a community. So I suppose, though, that what YouTube wants is for me to take lots of trades, right? I could just always have a market making sort of thing going on for entertainment's sake. I don't know. Yeah, there's a carry trade. See, the thing that I'm worried about is that statement yesterday just causes everybody to put the carry trade back on, that we just unwound. So, like, we went through a lot of pain for nothing. Of course, I guess if it really retraces and everything else just goes right back up to its highs, then maybe it's not for nothing. It's just kind of a blip, but still. I kind of feel like, you know, people got stopped out. We kind of reduced the risk there a little bit. Let's just let it sit for a while, you know? Don't say anything. I also kind of wonder though, like I'm not as, part of it is I don't speak Japanese, right? But when I'm watching the Federal Reserve, what I'm constantly seeing is the market reads way too much into the comments that they make, and they think that they signal certain policy changes and stuff that they really don't, right? Could that be happening with the Japanese yen? It's possible, and so maybe then we're okay. Octavia says every hour of the day my edge goes down. I think so. I have had in the past, I don't know if it's doing this right now, but I have had in the past where like the time period from about 8:30 to 9:30, there tends to be moves and I would tend to make money off of those. But it hasn't been as strong lately. So, I don't know. Does look like it's coming back down. Like we're right. Actually, that's interesting. So there has been a little bit of spreading. So because we flattened, now they're giving you 9.31 to buy. But so that's probably why when I took a 5-tick loss and I was a little bit like, I should have been able to get a break even. Well, part of it was because I did pay up for it. But I think that part of it was also the spread, the change in the spread. That means that a short in the 10-year might not necessarily be the best play. Like, if I really want to take this, I should probably be buying the rate in the 2-year. Except for that, I freaking hate that huge spread. But that would probably help alleviate that a little bit. But so I just have to think that's like 2 ticks we got to worry about. 2 ticks extra risk. So I guess what that means is that I really need to be confident about it continuing to trend down for me to take a trade, which I'm certainly not. And certainly not in the last 10 minutes that we have left. So it's okay. It's okay. It's all good. I'm not going to say today was a bad session. I would wish that trade had gone better. I think that we had some good discussions otherwise, though. Yeah, I'll see you later, Eric. I'll still be here for the next 10 minutes, so. Oh, by the way, I totally didn't notice this, but like, Bitcoin, the last hour or so has actually been on a bit of a bear run again. So that's interesting. I'm still seeing some volatility in the Japanese yen. So let me show you the yen here. I always have it super tiny. But, you know, this pullback essentially corresponds with the pullback that we've seen in the treasuries. But, like, the treasuries are still kind of, well, the 10-year is back into that lower end of the days range where the point of control is. So, like, basically, the 10-year treasury is back where it was at when the Japanese yen was down in here. So we're seeing some volatility in the Japanese yen, and the treasuries aren't responding as strongly to it as they normally do. They did respond to it, and it's maybe a little bit delayed, but then the treasuries sold back down hard. So, but that I think would maybe make sense in a world where, like, We think that the sell is that the market has gotten ahead of itself and that the Federal Reserve is not going to be as easy as the current market pricing suggests, right? And if they're not taking that trade aggressively, then it's just kind of be a slow thing. So it's going to be those sorts of things where it's like, yeah, there's a pullback, but it just didn't go quite as far as you think it should based on the correlated instrument, right? You ever look at cost basis for 6J? Oh, geez, heck no. But we can try it, sure. I think that to try it, though, I might have to do, yeah, okay. I'm going to make it on a separate chart. Duplicate in new tab. And I'm going to change the data series to have tick replay turned on. Okay, that's okay. And then we're going to turn on our inventory cost basis. I suspect my theory would be that it's not going to be very effective because I haven't found order flow to be as effective in the currencies because it's not the primary market for it. But it's worth a shot. Let's see what happens. Yeah, it's not very effective. well, it did come that high there did come right to the bounce. I don't know. So maybe that's a bad example because of the huge move that we had overnight, huh? Those aren't terrible. You know what? Let's leave that on there for a little bit. Close that one. Leave that on there. I'm getting all of the 10-minute warnings here. So I got this new phone case, and it's got like this sort of ring that you can like put it in here like this, and then you snap it down like that. But this is a magnet, and this is also a magnet. So every time you pull it out, it's like, oh, it gets pulled down to the magnet there, and then you put it back up and do that so that I can set it like that and set it up on my desk like that. Kind of annoying. I like that the magnets are super strong. I feel like, here's the thing. I feel like that there should be better ergonomic options for your phone, you know? Because holding it like this is not the most, you know, it's kind of like if I have it like there and it rests right, like eventually that kind of starts to bother you, you know? Why isn't it something that's like a whole handle that you can just very loosely and comfortably grip? Well, because you can't put that in your pocket, but like, surely there's got to be some ways to do it, or you know, when you're not walking around, you can attach it or something like that. You know, how come they don't make anything like that? I just need to wait for Neuralink interfaces. That's what I need to do. Try putting it on a side and put your finder through it. Oh, probably your finger through it. Oh yeah. That works pretty good. Yeah. So if you put it like this, and then you kind of close it like that, you put your fingers through it, and then you can actually kind of like clamp your fingers down. You clap it down on your fingers like that, and then that's pretty good. But it still is, because it's actually, you know what the problem is, that because it's metal, there needs to be like a thin layer of foam so that it can sit like that comfortably for long periods of time. With it being metal, kind of after like 30 minutes of that, it's uncomfortable. But I guess what that really means is I'm on my phone too much. That's what that really means, right? It's kind of funny how with technology, you'll bounce between extremes, right? Like I remember, especially when I was at the day job and everything, and so I was constantly like, okay, commuting to work every day. I had to take the train for a little bit of it, and I would always walk for lunch and stuff like, so like having my phone be small and portable was a super important thing. But now that I'm at home, the phone is in my pocket as little as possible. And so I really don't care how bulky it is. Actually, I kind of think that I should move to a Galaxy S Note or whatever they call it. The fold. I should get the foldable one. I am coming up on could get a new phone, but I don't know, this phone still feels new to me. That's a funny thing. This one still feels new to me. It's a S21 Plus. It still feels new to me. I don't. But I know that as soon as the plan expires and whatnot, that they're gonna do all the things to throttle your phone and make it slow down and yada so that you buy a new one, right? Maybe I will. I think I'm gonna put it off because I'm doing pretty good money-wise, but I can't like do crazy things. And there are a couple of big purchases that are coming up that, I want to account for, and I still want to be able to invest a lot with those. So I should really not do things that, like in the moment you feel like, but then it actually doesn't change anything, like a new phone. Because the kid needs a car. I need to get a new TV. I want to spend a lot on the TV, so like, Okay, so there was my ding sound. My ding. I shouldn't have said that. That was so bad. There's the bell that says it's time to end. So we're gonna end things. I'm kind of feeling like, this is a really common thing that happens to me. I'm kind of feeling like they are going to attack that downside now. I'm seeing like much more consistent flow coming through. They're taking bids out pretty good. The volume is accelerating in the 10-year. And I am seeing the volume on all three to the downside, although not as much on ZB, and I would expect that because of the spread. So maybe you get the break that I wanted. I don't know if it's a good trade because of the spread. Like, would I get 3945? Yeah. But I could have taken 393. But it's so common that it will do this and it won't do that break until after I'm gone. So, do you trade ES or only Treasury? Mostly only Treasury these days. You know what? I've gotten beaten up by ES too much. I think I can admit that. I'm not going to say that I was like terrible at it or that I have a terrible feel for it. I do feel that the order flow in ES is completely different from the Treasury and that they can kind of interfere with your reading of each other. I do feel that very strongly. So that's why I kind of decided to just focus on the Treasury. But we still watch it and we can still get some good things. I think that the approach that we take can work really, really well in ES. Is just that you really have to have strong flows to do it, right? Otherwise, the stuff that happens in ES is very random. And so then the game over in ES is kind of like taking on risk, which maybe I should play with that. I'm sure people would be entertained by it. Maybe I will. You're going to talk about that tomorrow and convince me to take gambling risks in ES, huh? But I should get going. I will see you guys tomorrow. Stay excellent.